you've released a report recently that I think is going to start to do a little bit of that. Do you want to tell us a little bit about the Price Predictor Index?
Yeah, I really love this report that we produced. It's kind of, unique as an overused word, but no one else is doing a report like this, and because there's this obsession with what's happening with median prices. And median prices are interesting. They tell us what's happened in the recent past. But we think that this report is a forward indicator, what tells us what might happen with prices in the near future, because we look at sales volumes, and we believe that the patterns with sales activity are a forward indicator of what might happen with prices. So in simple terms, if sales activity is rising in a location, then prices will react to that and rise, and it works in reverse as well. So what we've seen in this new winter edition of the Price Predictor Index, there's one big exception to the general rule. Most parts of Australia, sales activity is still pretty strong, and in fact very strong in most, but Sydney is the exception. In the second half of last year, we saw a pattern where Sydney sales activity was starting to fall away. And in the first quarter of this year, there was a dramatic drop in sales activity in Sydney. And then we're now starting to see that show up in some of the price data, where we're starting to see some evidence of prices falling in some parts of the Sydney market. So that's what we do with this report. We look at every town and suburb of the country, what's happening with sales activity, and we construct this report where we categorise markets as either rising or plateauing or declining or consistency markets. Some markets just very level, no matter what's going on in the wider economy or the broader property market. And it's a good forward indicator of what might happen in prices in all those places.
Yeah, so let's talk about Sydney for a minute, because you said that that's the one exception, that's the one major exception to the data. Is that fair?
That's right. Yeah.
Yeah, I mean, and what's I was going to ask, what's the you said that property sales volumes dropped off a little bit earlier in the year, and now we're starting to see that come through in the price data. Have you had a look into like what the kind of lag is between those two moments, or how accurate can you kind of be and go, okay, if they're going up, then at this distance, talk to me about that.
Well, this is the beauty of this report, and this is where it's valuable for real estate consumers. The time lag is typically 6 to 9 months. So, we can see, for example, a big uplift in sales activity, but it doesn't translate immediately into prices. It takes time for the market to realise that things have changed, and particularly in the other direction. So Sydney sales activity in Sydney started to fall away gradually after the middle of last year. But it was in the first quarter of this year that was a dramatic drop in sales activity. So now we've got a situation where only 26% of Sydney suburbs are actually still got rising momentum. And that's the lowest ratio in the entire country by far. And so it's so the pattern of decline started, say, 9 months ago, and now we're starting to see evidence, if we can believe the core logic figures, of prices falling, although they're not prices falling everywhere in Sydney, but the overall median price is starting to drop according to their numbers. But that time lag between a change in the market as measured by sales activity and prices reacting is something that investors can use to their advantage.